Morning all. How are we all doing? Morning Christian, Ian, Amy, Blue Trader, from Pontevedra. Morning JC, Danny, Gregors, Monkey, Michael, Virginia. How are we doing? Wednesday, halfway through the week. It's nearly Christmas. Right, today we've got Canadian interest rates this afternoon. So that's your main news this afternoon, Canadian interest rates. That's a really bad drawing, wasn't it? Expected to come out as a freeze, which there's no reason why it shouldn't. Yeah, we should get probably a bit of weakness off the CAD this afternoon and probably off the US dollar as well. It's non-farm employment change at 1:15 as well this afternoon. So we got that. We've got Bailey speaking. We might get some forward guidance on the pound this morning. And we've just had the Australian GDP figures. So as you can see, we've had a load of movement in the Australian dollar back the opposite way. So as usual, the market just whipsawing up and down constantly. So there's a few ADR opportunities on New Zealand pairs and on Australian pairs based off of the ADR moves. So GDP was down based on forecast. So obviously, typically you would find Australian dollar dropping on negative numbers, but it went up because it came down so hard the day before. So just market moving up and down, basically. So that's your news for today. Lots of news spread out throughout the entire day. We've got construction PMIs for the pound this morning, which sometimes do move it, but not normally. It's not that important. It's more to do with the home sales, the construction side of things that moves the market rather than the PMIs. But 11 o'clock, 1:15 and 3 o'clock. So nicely spread out news today. So we should have a good day with a fair bit of movement. Other overnight news, not an awful lot that I could see. Yeah, that was it really. So nothing else particularly exciting on the overnight news today. Euro odds just hit ADR as well, so another ADR hit there. So drop down lower time frames. Look for those alerts to go long and short. Haven't closed anything out so far today. Did 0.5% yesterday, so I banked those Aussie pairs yesterday on the news. Everything else is just kind of sitting around at the moment. I'm in the Aussie US at the minute, long. I'm also in it short. So we've obviously had that short position on for a while now. And we got an alert yesterday to go long. So the EA's got me in long on that. So what I'm going to do is I'm just going to trail that long position with 150 odd points. Basically just because I don't really want to be long. I want to be short on the Aussie because I don't think the Aussie is going up based on what we had yesterday with the interest rates. So, and that US dollar, I think we might get a bit of power on that this week. So I'm wanting to be short and stay short. So I'm just going to trail that long and basically look for it to push up somewhere and then reverse back down again. So if we get a hit to ADR, basically I'll get out of that long when it starts to come back down again. And then obviously I'm still in the shorts. So looking for a drop on it basically. But if it gets up to sort of like $250 or something, I'll probably just bank it. In fact, I might put a TP on it. Yeah, I mean, ADR basically today is 0.25%. So I'm just going to bank 0.25%, which will be around about 38 retracement. Actually, it's a bit more than that, nearly 50. So look for that type of move, and then I'll get out the shorts when it drops back down again. Oh my God, selecting everything but what I want. Right. DAX today, we are gap up, very small gap up this morning. Another monster day. We broke out yesterday of that recent high. well, say recent high. It's a high going back to July. There is no upside resistance now. We're at all-time highs. No idea where it's going. So we've gapped up after a breakout to the upside. So this area is obviously an area we could find the market finding exhaustion now. So we'll have to see what happens. But very small gap to the upside. So there is potential for a gap fill short at the open. If not, obviously upside. There's just nowhere to pick a target. So you've just got to use ADR basically today. Yesterday was 5 out of 5, 4 out of 4. Every trade yesterday was just spot on. In out profit. DAX was a small profit, $100. Made about 500 or 700 on it. Every other instrument. So it was a massive day yesterday. Really good. Lots of clean breaks. Lots of easy money making opportunities with the opening range breaks. So yeah, we'll see where this one goes today. We've got 1 minute to the open. Morning, Dion. Morning, Danny. What time frame am I in? UK? Jacob? What time frame? Oh, time zone. Yeah, time zone am I in? Time frame? Time zone? We'll have a look at the ADRs in a minute. RSIs, there's not a lot on the RSIs. It's still the overhang from those Euro moves, which are still ongoing with some of these. Morning, Rajiv, Jacob, Mumo, day trader. So we'll see where the DAX goes this morning. Up high. Down a bit. Bit loud. Right, there's your open. So we're opening above yesterday's high. So downside target, if we break short, I'll be looking for some kind of reaction at the gap fill. If we break long, obviously, it's just sky's the limit type thing today. So just go with the momentum, basically. But I still think these indices are just ridiculous at the minute. You know, that needs a pullback, a proper pullback. I mean, like a good couple of multiple ADR days. The Dow looks like it's flagging at the moment. S&P's gone sideways for the last week, and the NASDAQ started to drop. So the US indices are struggling a lot more than the European at the moment. This DAX just unbelievable. I haven't seen it go this parabolic for a long time. So we'll see. Go with wherever it goes, because it doesn't want to stop. And it's going long by the looks of things this morning. Again. Okay, long on the DAX. Morning, Kennelly. So we just wait for this 5-minute opening range to go in, and then we'll have a look at FX. Morning, XRUpdate.news. So first news, Impactive today is going to be 11 o'clock when Bailey speaks. So what's your pound exposure, if you've got any on? Morning, post hoc. How we doing? DAX is on fire this morning. Look, wow. Okay. So, market's waiting for something. Obviously, that is not going anywhere. This has got Hedge written all over it today. Going to be a tricky one to the downside. Tons and tons of areas to the downside. That main propulsion gap there is probably your strongest support on the way back, and then that propulsion gap out of that accumulation. So we've got two good targets to the downside, one at 4, one at just over 2 if it does hedge. It'll be a tricky one to get out of today. But it certainly doesn't look like it's got momentum to go long, does it? Hasn't got any momentum, full stop. Dead. Wow. It's going to gather me into the pip, isn't it? Again. I've lost track of how many times this has literally got me in and then literally gone back the other way. It must be 5 or 6 times now it's hit me to the pip. I feel like a broken record that I keep saying this. Am I using 25 or 20? I thought I was using 20. 3. I'm using a 3 pip offset, and it's got me in at 25. Positive slippage. Wow. I got positive slippage. That's amazing. Yeah, brokers don't give you positive slippage. Give me money. What? So yeah, there is an argument for having a 5-point offset. I might test that, because just to test the amount of hedges that are received from a 5-point offset as opposed to a 3-point offset, because I seem to be getting tagged on a lot of these quite often. This is why I've put it out high. This is why the offset exists, to stop this. Basically, the double top spread entry, which happens a lot. That's what the offset is there. It's designed to negate. But it seems to me that they regularly seem to go 3 points, almost exactly 3 points outside of the pre-market ranges, which is, I'm sure it's just coincidence, but it just seems to be happening an awful lot, doesn't it? This looks like a hedge today. It's got no volume at all. So we'll wait and see what happens with that. I'll come back to that later because it's not going anywhere. Morning, Peter. So ADRs and everything today. Obviously, we've got 3 news events coming up for pound, US dollar, and Canadian dollar today. So the majority of the move today should probably be US and CAD based. So those are the 3 to concentrate on today. Watch. I don't know if I got, hedged. So deal with that later. ADRs basically mainly Australian and New Zealand based, obviously, because of the news for the GDP figures. So Aussie dollar Swiss is hit up to previous day's low. So there's your resistance bounce. So your 5-minute reversal alert on that one has already triggered. Whoops, time frame. Very nice tight reversal alert today. So there's your entry. No retest yet. So we've just gone into accumulation out the back of that. So fair bit of strength on this Aussie after that news. So there's your ADR hit on that one. That's coming up to 125 ADR. So if you're looking for a pullback down into that area there, those previous highs. Aussie dollar yen, nice reversal alert on that one. You've already had 28 out of that, so you've had over a third of an ADR. New Zealand dollar Swiss just hit 125. Euro odd, that's just tapped ADR just now. So there's your reversal alert. So that's your W pattern. So as soon as you get that reversal alert, look for a pullback up into that low. Euro New Zealand, Again, just hit ADR. Where's the support rectangle? Oh, there. It's tiny. Look, off there. There's just no volume anywhere today, is there? It's like someone's turned the tap off. So your reversal alert is about to go in 2 minutes. As long as that closes bullish, you're off. Target on that one. It's over half an ADR. So that bottom of that wick is 73, which is half an ADR. So if you just wanted to target the bottom of that wick, but that area there obviously is support. Or rather resistance now. Pound New Zealand. Again, New Zealand just about to give you that reversal alert. Up to resistance, you got 82, which is over half an ADR. New Zealand dollar CAD. Just about to give you the alert. That's a bit more tricky, that one. You've got this propulsion gap to the downside here. Not really a propulsion gap. It's just a big order that came in when they broke that high. So that is the breakout. So they did definitely buy a lot there because they broke out of that range, which wasn't even a range, really. It didn't really form, did it? Oh, yeah, it did. So you got that range high there. So that was the breakout of that level. So potentially you might find some support there. Bear in mind, obviously, Canadian this afternoon and the US will move the Canadian as well. So you want to be out of these intraday really before the news comes out, or at least protect them if you're in profit, because when the news comes out, it could well go against you. New Zealand dollar Swiss, that one is just putting in some really nice tails at the high there. You've already had a reverse alert on this one. So we hit ADR there. Your first reversal alert on this one. Tricky. That was a new high, wasn't it? So that was your reversal alert there this morning. Your first one. So pushed down. But it's just put a new high in again. It's struggling here. Can't get through these highs, can it? So next reversal alert is going to be pretty much the same place as any other reversal alert you've had this morning. Same level. So that's stalling out. New Zealand dollar yen is the last one. That's 125 ADR. Beautiful reversal alert and retest this morning there. On its way down. Support on that. Might have had it actually. So if that breaks back down again below that low, you're looking to come back down to here. So there's plenty of room to the downside on that. So there's your ADRs. We're on Wednesday. We've got 2 weeklies. Aussie dollar, US dollar. So obviously we had a big, strong move on this one. Basically, this one, we looked at it yesterday. It hit the weekly range yesterday. Obviously, we've had 2 multiple ADR moves on the trot. So that's putting 146 pip move in 2 days. So we're on the pullback on this at the moment. So this is the profit take off of that move. So you needed to get into this one yesterday on the reversal alert on the lower time frames. You've had an alert on it this morning there on the 15-minute. There was multiple alerts yesterday. So you would have got into this one yesterday. I got into it this morning, or rather I got into it yesterday actually there on the H1 RSI extension. But I'm protecting this one because I think we are probably going down. This GDP move today is just a profit take on the interest rates from yesterday. So I think we're going to continue down, but we'll see. You've also got the pound odd, which is also hit its weekly range. So again, 2-day move, 296. ADR is 119. Weekly range is 271. That's done 296 in 2 days. There's your profit take move. So straight in, straight out. All these played out. You know, everything's played out beautifully on ADRs this week so far. So there's all of those. Your weeklies. DAX is broken to the downside. Gap fill done. Pretty much. Again, you know, wick of the candle, you know, somewhere around here potentially could be the gap fill done if it wants to rally long. I suspect we might have a down day today. There's not a lot of volume here, but we'll see. RSIs, So Aussie, New Zealand, these are all 4 hours. So all the hourlies that we've had this week have all kind of started to play out. All the 4 hours that we had previously are still extended, and the RSIs are just returning to mean now without any movement. So Aussie, New Zealand on the 4 hour, we're on this big drop down. So we've looked at this one a couple of times. I suspect we're probably going to sell back down to support. And then we'll get a bounce from there. It's very, very range bound. So I think probably, you could get into this anytime. You'll already be in it if you're trading H4M15 or H4M5. You're already be in it now. But you'd have been in it from here. That was the entry that I got. You can hardly see it actually because it was on the hourly. But that was my entry there and out. We've gone sideways for 4 days. We've just put one more leg in on the news yesterday. So this could go either way. I suspect probably down to that support. So you'd just be scaling into that move and then get out. Obviously, your target's going to be either that propulsion gap or that propulsion gap. Depending where your average is, that'll be an easy propulsion gap to hit. When we get down to that support, so looking for a push down into there and then pull back up into that, which would be a 50% retracement on that move, roughly. Euro Swiss extended on the 4 as well. This is all over the place. I'm so glad I got out of this. That was probably the best aggressive drawdown control position I've taken this year. It was spot on, and my exit was spot on out of that propulsion gap. This euro is going to melt. The ECB have gone from being really, really quiet and not moving interest rates as fast as everybody else and keeping stum about kind of what they're doing and not really saying an awful lot. They've got their interest rates up to 4.5, which is lower than pretty much everybody apart from the Australians, and they are doing better on inflation than everybody else. So this has sort of come out the blue very quick, this drop in inflation. They haven't been saying much about it at all. And all of a sudden, it's like, we've cracked it. Therefore, you're going down. There's nowhere else to go. So I'd be very careful about euro longs at the minute because that CPI figure, as you can see, has started a fundamental shift. If you look at it on the 4 hour, it's one of those propulsion moves that you're probably not going to get back to, like that one. Yeah, fundamental shift. Don't get back to these. So I think when we get down to this low, we will get a bounce. But I get the feeling the bounce will just form a range at the lows, a little bit like here, and then we will move back down again. So just be a bit careful if you're any euro longs. It may not do it. It may bounce back nice and hard. Things change. Don't forget, with everything that you trade in Forex, there's two parties. Yes, the euro could be weak as hell. The Swiss could come out and say they're dropping their interest rates by 0.5% next week, and all of a sudden the Swiss franc will weaken ridiculously, which will automatically make the euro rise. So it's not just about the euro being weak. There's another currency involved in every position that you take. So, but the euro forecast moving forward, probably going to be bearish. Euro pound, same thing. We've got news today from the pound. We've got Bailey coming out. If Bailey rallies the pound saying the inflation figure isn't coming down as fast as we thought, we're definitely not going to be dropping interest rates. There is a possibility if the figures don't change that we're going to increase them again. The pound is going to rally. The euro pound is going to collapse. Yeah, so just, it's all fundamentals. But as it stands at the moment, the pound should be stronger than the euro moving forward. However, we know we're probably at terminal rate. Our interest rate as well is coming down way, way, way faster than everybody else at the moment. But we always get this initial move, which then the interest rate slows and then it speeds up again. So I think we might have it quite right in the UK at the moment. I know it looks bad, but that will probably drop down to a 1%, which will bring us down to 3.5%. That brings us back in line with most other countries. So I think we're probably okay. We've just done it in a really awkward way. So pound should be stronger than euro moving forward. So again, nice mean reversion opportunity. typically I would be saying probably going to get back up into that propulsion gap. At the moment, that nasty accumulation is probably the length of the pullback you'll get. It's more likely going to be flags or 38 retracements on legs. We're probably going to a fairly strong trend on these moving forward. Euro US dollar, again, US dollar very, very weak at the moment. Euro very, very weak at the moment. A week against a week typically moves sideways. So you can see how weak this euro is. When you've got a weak US dollar and the euro is coming down against it, you know it's really weak. So nicely extended, and we're getting a little bit embedded down here. There's a potential for this one to drop further back down into this support. We're in this accumulation break at the moment. So you'll find some buyers probably somewhere around this area today, within ADR today. But obviously it's going to be dependent on what happens with that non-farm figure at lunchtime. If that comes out as a massive positive, it's just going to scream straight through any level and we'll be down at ADR. But if we get down to ADR, you're running into that balance, which is a previous resistance turned support. So we know that there's a lot of buyers in that area. We know there's a lot of buyers in this area. This whole zone here is where we bought and made that move happen. Fundamentals are a little bit different now, but you will find people will be looking at buying this area. So if you're already in this one at some point in there, you should get a decent bounce out of that. We'll be looking for a pullback on that leg. So if you measure that leg, let's say we bounce somewhere around ADR, you're looking to pull back into that propulsion gap as a shallow pullback. There we go. So that's your RSIs. Not a lot to look at today. My exposure's fairly light. I've got 4 on at the moment. Nothing's moving. So if stuff's not moving and get extended, there's no entries. Just got to be sit there and be patient. I'm not anticipating a big month in December. It very rarely is. So I'm trying to get flat or as flat as I can for Christmas. So I'm going to give it this week, see if we get any big moves off of non-farm. And then next week I'll be turning the EA off on everything and looking to get flat. So we got a lot of news next week. As you can see, we've got CPI figures, we've got PPI figures, we've got the PMIs next week. We've got monetary rates coming out for the pound and for the euro. It's a massive, massive, massive week next week. And it will be the last proper week of movement before Christmas. So I'll be taking the week after off. So I'll be looking for next week to get flat on everything, or as flat as I can. But, you know, position trading doesn't work that way. If you're not flat, you're not flat. So you have to watch it. But it's, you know, you can watch it once or twice a day, can't you? So there you go. So that's those. DAX is back inside the initial opening range. So kind of gap fill so far today. Hopefully that is just structure short. We've got a pullback going in now for a new leg down. That accumulation is not a bad target to the downside. Bear with me a sec. Someone tooting their horn outside the house multiple times. I was trying, I'm not sure if it's for us or not. There we go. Mumo, odd issue on specific demo account. The MRA isn't taking any trades. Don't know. There's a 25 million combinations of settings in the Market Reversal Alert CA. I've no idea. Couldn't tell you. Make sure auto trading's turned on. Make sure you got the smiley face. Other than that, check your spread filter, usual stuff. Don't know. Send me your set file. Check it in the if you run it in the back tester and it takes trades, there's no issues. It'll work. It's just a case of waiting for conditions to be hit. Yeah, it's probably not, shouldn't be taking a trade. You've probably got a filter there, which is meaning it's not going to take a trade. It doesn't take reversal alerts. It takes trades based on the conditions you set. So if all conditions are not met in the settings, it may not, well, it won't take a trade, obviously. Pound yen, we can have a look at that. But if you want to send me your set file, but backtest it in the strategy tester first, verify that it's not taking trades, and then look at why. If you think it should be, look at the inputs that might stop that happening. Pound yen, it's just going nowhere at the moment. Sideways. So at the minute, you'd have to say it's a long, or it's not. It's waiting to break out short, back down into this area today. It's just not a setup for me at all, in any way, shape, or form. It's just basically, it's at the low of a range. The only thing I'd want to do at the low of a range is buy it. No. Can't really give you any analysis on that. It's just sitting there for 2 days, not doing anything. Anything you do with this one today, 11 o'clock this morning, it's either going to end up down there or down there, potentially, or it might not do anything. Can you explain why you don't have trend lines? Because they're crap and they don't work. Simple as that. If you draw a trend line on a chart, right, so every pound yen right here, go and draw a trend line on this chart. Yeah. 10 people in this room draw a trend line on this chart, you'll get 10 different trend lines. How can they possibly have any use when not one person draws it the same? Yeah. So is it that? Is it that? Is it that? Or should it be that? Because of that wick. So which of these do you use? Or should it be that one? I don't know. Or am I starting it from the right place? Should it be there? And down to there? So that, should it be that? Actually, no, that's probably a bit long, isn't it, that one? So we should probably be using that, shouldn't we? Although that seems pretty good as well. See what I mean? What's right? Load of rubbish. It's all a load of rubbish. Hang on a minute, though. Aren't we in an uptrend? What am I doing drawing trend lines down? What am I talking about? We're in an uptrend. Of course we are. Utter rubbish. A lot. All you're doing is you're drawing something on your chart to influence whether you hit the buy or the sell button. What are the odds of that trend line being correct? I say it in there every day. Draw what you like on your chart. It's all a load of crap. Nothing works. Because everything has exactly the same odds. Draw as many trend lines as you like. You'll be wrong. I can guarantee now, all those trend lines I just drew on the chart, if everybody in here went off and drew them, some of them are going to be exactly the same ones as I've drawn. Some of you are going to come up with ones that I haven't even seen. There's a really, really good one here. Well, I don't know. Is that good? Should it be that? Or maybe I should have drawn it from there and just ignore that wick. Maybe if I use that wick. No, that one's better. No, because that doesn't work up there now. That's it. I don't know. I tried trading with trend lines. Do you know what? But there was a I can't remember who said it to me. One of my mentors at one point said it to me. And it was when I started looking into how this market works and how the banks and institutions work. And he said to me, you know that when you draw that on your chart, right? Every banker in the world is waiting for everybody on the planet to sell there. Yeah. When you sell there, what do? Place a stop. Why do you think trend lines, that trend line there, yeah? Why do you think that happened? Because everybody shorted it there and put a stop, which they took. And then it carried on going the way that everybody thought. Yeah. Everybody in the world now watching that trend line, as soon as it gets back to there, there's going to be an absolute bucket load of limit orders going the opposite direction. What a target. Conspiracy theories? There you go. The banks and institutions introduce these to you so that they can find out exactly where your stop losses are going to be. I don't know. Cannot find the reason for SIH closing all positions, including pendings, when I close a single position. Nope, no idea. FTNet, I don't know the answer to that one. The solution is stick it on a VPS and just run it on its own. Then you won't have a problem. EAs are designed to be run on auto. So just use it on a separate chart, separate platform, and you won't have a problem. Also, SIH as well has multiple things going on in the background. Yeah. So the stock index Hedge EA is monitoring number of trades because it takes 2 longs and 2 shorts. So there's algorithm in there that says if there's only 3 positions on, do this. If there's only 2 positions on, do that. If you close a position out in profit, do this. Yeah. It's not designed to be run with other things. Every strategy you trade should always be run on a separate account so that you can see what that strategy is doing. If you mix multiple strategies on the same account, you haven't got a clue what anything's doing. And more importantly, your EAs that rely on orders to be placed in specific orders and all sorts of things, they're not going to work. Everything goes on a separate account. What's the spread filter? It's this one here. So it's use spread filter, true or false, max spread in points. So a lot of brokers, this is the problem with brokers and digits after the decimal, all that sort of stuff. It's all different on all sorts of brokers. So if you set that to true, some brokers might class that as 10 pips. Some brokers might class that as 1 pip. If you're trading an exotic, that might be 100 pips. Yeah. So again, always put it in the back tester. This is really easy to test. If you set that spread filter to true there and leave it on 10, and you run a test in here and you set the spread to 5 and it takes trades, you know that that is using pips. If you set it to 10 and it stops, verified. Yeah. Every question I get asked about every product, if you put it in the back tester, you will always be able to answer your question way faster than anybody could ever answer it for you. If you type something in Telegram, by the time you've typed that out, you could have stuck it in the back tester, run a test visually and gone, oh yeah, and answered it yourself. It's so much easier to now, I'm not saying I'm not saying that you shouldn't have asked that question. What is a spread filter is a valid question. How the spread filter works, you can test yourself very easily. But that's what it does, basically. The idea behind it is to not take trades if spread widens around news events. You can also use it for overnight as well. So obviously at the overnight swap, the spread can go half an ADR, So the idea is if you get half an ADR spread, it won't get you into trades. So it's there for that reason. I don't use it personally, but that market reversal alert CA was the first product I made for other people. And this is why it's got all these inputs in. As you know, I don't use any of this. All this stuff. Somebody sent me a message the other day and said, why don't you use the exit on, I can't remember what it was. It's to do with multi-direction baskets. Why don't you use multi-direction baskets? I don't even know what it does. It's something that somebody asked me for because they wanted to test something. And at this time when I was building this EA, everybody said, what about? And I was like, oh, yeah, okay. And this is why it's got all these inputs. This is what other people wanted. None of it works. Well, it does work. Obviously, it all functions. But as for making a difference to things more profitable or less profitably, doesn't make any difference, does it? Amazon Santa was in Lee's house already. Amazon Santa's been here, yes. Amazon Santa's arrived. twice yesterday. You know it's coming to Christmas and Amazon are starting to panic when your driver arrives at 9:15 at night with a van load of crap that he still hasn't delivered. It's getting busy, guys. Get your orders in. I've got one order I placed on Amazon. I did all my Christmas shopping. I binged my Christmas shopping on Monday as much as I could. And some of the stuff already is delivery on the 19th of December. And you're like, oh my God, 19th of December. Got to get going. Got to get it wrapped. What can you read into it when the weekly daily spread is a minimum maximum value? Apart from what can you read into it when the weekly daily spread is a maximum minimum value, apart from the index stock consolidating? I don't really understand. So if you're talking about ADR, the spread, you mean the ADR, yeah? So if this is consolidating, getting smaller, it means that the market's not going anywhere, yeah. But you don't monitor that, do you? You don't. There's no historical ADR that I'm watching. I'm looking at what is the ADR over the last 10 days. So I'm looking for, is this thing in an expanding volume, i.e. there's a lot of interest in trading it, or isn't there a lot of interest in trading it over the last couple of weeks? Yeah. So what you tend to find is, I think I know what you're asking, but what you tend to find is when you get a fundamental news event that shifts a currency, the ADR of that currency will typically increase. Let's look at the yen as a really good example. Look. Yeah. So we're not interested in trading the yen at the moment because we don't know whether an intervention move is coming. Yeah. That's what the ADR is. Absolutely tiny. Look at these ranges. They're really, really, really small. As we're about to start a move, volatility picks up crazy. Look at the size of the volatility there compared to the size of the ADRs there. Huge volatility move. Then there's a big run. After that big run, we've now got a big drop. Now market's back to normal. This is normal ADR for the US dollar yen. That was abnormal ADR for the US dollar yen. So a lot of traders will watch the VIX volatility index. And that will give them a gauge as to whether the market is moving or not moving. When the market is moving, you need to be holding positions longer and getting out of positions quicker. When the market isn't moving, you can hold, you know you haven't got as far to move, so you're not going to target as much. And this is the whole purpose of ADR. ADR tells you what to expect. If I am going long on a break there, and I'm going to put my stop loss there, and I'm going to target that, I know that it's got to move 200% of its normal range to get there. That's hard to hit. However, if I go long there with a stop there and target that, I can hit that today. This line will change. It might be there, it might be there, it might be there, dependent on how much this thing's been moving previously. So are we violent or are we contracted? This is what I talk about. The easiest way to demonstrate it is with the S&P. Yeah. So you look at the S&P ranges in a bull calm and a bear volatile market. Yeah. This is a bull calm. Look at the size of the candlesticks in a bull calm. Yeah. This is normal market conditions for the S&P. It's a trending instrument. It's designed and manufactured to go up with stock prices. Yeah. Look at the bear volatile market and look at the size of these moves. If you do not adjust your targets and your strategy when we go into this and use the same ones as you had in here, you'll get slaughtered. Equally, if you're using what we were using here when we return to this market condition, you're getting slaughtered. So the idea of ADR is to tell you what is the average roughly right now. So there's always going to be a 2-week adjustment period because we're using ADR 10. So you're always going to be out a bit. But it's roughly, is it roughly that, that or that. Because if it's that, I need to be targeting more and using smaller risk. If it's that, I need to be using higher risk and targeting smaller moves. That's all it does. And that's why you use ADR. You don't use pips, because the ADR changes. Aussie dollar, pound New Zealand's ADR was 350 to 400 3 years ago. It's now 130. So I don't want to be targeting 430 pips, which is what I used to target when the thing only moves 130 a day, because it's going to take me 3 days to even get there if it rallies for 3 days solid, which it won't. Yeah, so it's, that's what it is. If that's what your question was. Otherwise, I've just waffled on for 10 minutes explaining something that's totally irrelevant. Jacob, EuroCAD. Not going anywhere at the moment. Same as the DAX. So we're down at lows. I'm long on this at the minute. It's kind of the position I don't want to be in at the moment. We've got a nice support from, that was last month actually, last month's low coming up shortly, which is an accumulation. Nice area of balance for 5 days. We had a propulsion breakout, retest, 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 and off we went long. So this is where we started the buy move. So we're likely to hit a little bit of a hurdle on the sell move when we get here and get a bounce. So I'm hoping today with the Canadian rates that the market basically weakens on that, which if they come out as expected, we probably will get a little bit of weakness on the CAD. You can never tell at the moment which way it's going to go when you get an as expected result, but we've historically seen over the last few months weakness on as expected results. So Euro will be able to rally on CAD weakness. If the pound rallies as well this afternoon, this morning when Bailey talks, the Euro will possibly get tickled along with that as well. So there's a good chance today we might get some movement. But I'm long at the moment. So that was the RSI extension on the hourly. That was first entry. Didn't get a bounce there. We're now back in this accumulation, reaccumulating. I'm long, nothing I can do with it at the moment. So, however, Euro overall bearish. Thanks for subscribing, Yin Yang. Welcome aboard. Yin Yang, good name. If you're putting your ADR indicator on a platform, what that does not offer it as standard in their drop-down menus, the ADR indicator doesn't come as standard in your drop-down menus. That's why I built it. There is no ADR indicator. There is no ADR indicator, Wayne. The ADR indicator does all the calculations based on the data in your platform. All you need for this to work is 10 days worth of data if you're using ADR 10. That's it. So the ADR indicator, if you look where the lines are, yeah, there, there, and there. If I change this to ADR 5, those lines are now there, there, and there, because the average daily range in the last 5 days is different to the average daily range in the last 10 days. 1, 2, 3, 4, 5. So it's that, plus that, plus that, plus that, plus that, divided by 5. That is ADR. And that just basically plots a line from the low of the day and the high of the day on your chart. That's it. It's all it does. It's nothing complicated. It's just showing you how far on average does this instrument that I'm looking at move on a daily basis. So I know what to expect. It's not an indicator that is, it's giving you, it's what we call a condition indicator. So it's telling you the condition of the market at the moment is within average ranges, within normal tolerance. When we get outside of normal ranges, outside of normal tolerances, and there hasn't been a news event that's triggered that, there's a good chance that it will exhaust, because on average, it doesn't get higher than that. So on average, it spends 58% of its time within those lines. Yeah. So this is what the percentages are telling you. How often do we get outside of our average daily range? 42% of the time. less than 50% of the time, we get out of these ranges. So we are expecting price movement within that range today. 58% accuracy. If it gets outside of there, the chances of it going further than that are 23%. If it gets beyond that level, the chances of it getting beyond that level are 12%. So there is a 88% chance it's not going to get further, which means one of two things. We're either going to sit there and accumulate, or we're going to pull back. As mean reversion traders, we're interested in pullbacks. So this is why it's used. This is why I go through the ADRs every morning. Yeah. What's extended today? Aussie dollar Swiss. What are we expecting? Pullback. What have we had? A pullback already, really, but not a very deep one. How far it's going to pull back? No idea. And this is where your skill at looking at support and resistance comes in. There's two levels, which are obvious. That one, which we've already hit, and then that one, which is the next, or maybe even that one. But somewhere around there, I would expect us to find some support if the market is going to go long. If the market is going short, we've had it. So if you're in a bear market and you get an ADR hit to the upside, you can play a short to continue a trend. If you're in a bull market and you get an ADR hit to the upside, you can play the pullback. Either way, you need to know how far things are going to move. So with the DAX today, really good example. If we're going to go short on the DAX today, there's ADR. So if we're going to go short and we suddenly scream down really, really fast and hard down into this level, I've got two things going for me. This is the normal average daily range of the DAX. Therefore, it's probably going to start to run out of steam here. We've also got an area of previous resistance that we struggled to get through. And finally, we smashed through it, used it as support and flew away. So we know there's a massive batch of buy orders at the average daily range. So if it screams down really hard, the chances are these buyers are going to add back into their positions, and these sellers are going to be exhausted because they've put in as much selling as they usually do on an average day, and it's going to pull back. It's all about confluence trading, is finding levels that prices have moved from because banks have placed orders, and finding what the extremes of movement are. If you know what the extremes of movement are and they consolidate around about an area where the banks are going to move it, there's a good chance you're going to get a bounce. Which is why today, if it breaks to the upside, I've got no idea where this is going. The only thing I can pick is ADR because there is no resistance. We're at all-time highs. So if this goes up, I shall be looking for it to get roughly to where it does on average and hopefully pull back. Which one was it I took yesterday at ADR? Is it the Dow? No, it wasn't the Dow, was it? S&P. So this one yesterday. So ADR is 300, yeah? So there's your low. That's 300, yeah? So that line, literally that line, is 300 pips from there. That was ADR yesterday. So yesterday, I got in short, got hedged. So I said, right, okay, I've no idea where we're going to the upside, so I'm going to place my target at ADR. I got out of the longs at ADR, and look what happened. Why? Because it's moved its average daily range. It's exhausted. It has to pull back. Whether or not it pulls back and rallies, no idea. Could pull back, do an A-shaped recovery, bounce, and then drop. No idea. I don't care. What I know is on average, it will move a distance. And there's a 58% chance it won't get beyond that line. And if it does get beyond that line, the odds of it going further drop dramatically down to 23%. So I've got the odds on my favor that this thing isn't going to go much further. So I'll target that area and get out. That's exactly what I did yesterday. I have no idea if it's going to work or not. The odds are still the same. When we get there, the odds are still 50-50 as to whether or not it will get exhausted today. Everything is black and white, 1 and 0 in this industry. It's up or down. That's it. There is nothing else. Market goes up, it goes down, and it moves through time. Those are the three constants of trading. There is nothing else. Your odds of getting a trade right directionally at any point are based on whether or not it's done it before or whether or not it's something that does usually. Those are the only two clues you've got as to whether something is going to turn at any point. And the fact that you can see people doing it. So at ADR yesterday, we got a huge bearish engulfing. That was a signal that we've exhausted ourselves at the normal average daily range, and they're likely to profit take on the move. They've just got a load of money sitting in their P&L on, and they did. That's why that trade worked yesterday. It may not have worked. I had no idea. When I got out of those longs, it could have pulled back that far and then screamed off in that direction, in which case I would have had to re-hedge it. But you don't know that. If we knew that, we'd be millionaires. This is a prime example today. Where's this going? I've no idea. But if it gets down to somewhere around this area, there's a good chance it's going to pull back. So my dashboard rarely has the same triggers as yours. The odd this morning. What, the ADR dash? What's your ADR? So what, I mean, look at your ADR on Aussie dollar Swiss. What is your ADR reading on the Aussie dollar Swiss at the moment? It should be about 40. Might be 38, might be 42, but it should be roughly that, yeah? So that has done 47.8 pips today on a 40 ADR. It's an ADR hit. That should be lit up. If it's not lit up, you possibly, well, it is lit up. I mean, it can't not be lit up. If it's done more than its average daily range, it will light up. $35.8 on a 36. Yeah, so yours is 36. So you're only 4 pips out. So the difference between you and me on a candle is something like that. Make sure you've got 10 days worth of data, yeah? So if you go on your Aussie dollar Swiss now, go to the daily chart and hit the home button a couple of times. Just make sure you've got 10 days worth of data loaded. If you haven't gone to your daily chart, if you've been sitting on M5 and M15 an hourly, and that's all you've ever seen, there's no reason for your broker to load any more data than you need. So if you don't go to your daily chart, some brokers will automatically download 3 months of data or something, or 6 months, or a month, or something. Some brokers won't download any data. When you open a chart, it will go, get the data. If you have never gone to the daily chart on the Aussie dollar Swiss and it has never had 10 candlesticks there, it hasn't got ADR 10 to calculate because it hasn't got 10 days worth of data to use. Occasionally that's an issue. There's not many brokers that do that, but so just test that. But if your broker, if the average daily range plotted by your broker is 36, it's 36. Yeah, don't forget we're using averages. If my broker on average moves it 40 a day and your broker on average moves it 36 a day, you're trading on your broker. You use your broker data. My broker uses 40 and it's rough. Yeah. If this thing like there got to there and it missed 125 ADR by that much, it's roughly 125 ADR. Nothing in trading is spot on. Yeah. Every now and again, price will move to the pip. Yeah. The majority of the time, price will not move to the pip. It will move somewhere around the pip. So when we are getting close to ADR, look at my DAX today. Yeah. I'm going to get out there because it's 5R and it's in that accumulation. It's roughly ADR. It's not ADR. It's somewhere around ADR. So if I get out here or here, it's getting out on an extension. Don't look at things as black and white. Has to hit that. Otherwise, I'm not doing it. If it gets to there and you get a bearish engulfing, take it. Because it might not get to there. Market moves at areas. It doesn't move. Like this gap fill today. I class this as gap fill. Gap fill done. Why? Because it hit the top of those wicks. Other people will be sitting there going, no, it's not a gap fill because it hasn't got to the exact close of yesterday. Your broker's close of yesterday might be there. My broker's is down there, but roughly it closed somewhere around there and it's pushed back down to it and it's bounced. So it's probably done the gap fill. Has it or not? I don't know. The odds are 50-50 as to whether or not it's going to come back down here. So I can't worry about it because I have no idea whether my broker is showing me what the market is interpreting, because the market isn't seeing my broker's data. Everybody's got different information. This is why nothing's exact. Everybody's looking for an exact. There isn't an exact. There's a rough. That's all we've got, which is why we position trade, because position trading isn't exact. I have no clue where price is turning. I have no idea if a reversal alert is going to hold. I know roughly around support resistance areas, 50% of the time we'll get a bounce. So if I can't know for sure anything that's going to happen, how can I formulate a strategy to trade it? Because it's going to fail the majority of the time. So if you have a strategy that doesn't rely on entries and exits being accurate and relies on the market moving up and down, which is the only constant we have, it goes up and it comes down. We know it because we've seen it in the past and it's happened for hundreds of years and it will never stop happening as long as people want to make money. If we know that, we can trade and make money out of it. Because if I get in and it's wrong, I can adjust my price so that when it comes down, I can get out. Simple. That's what everybody else in the market that's making money does. Yeah, nobody puts an order in the market to go, if I'm wrong, take my money away. Yeah, because you have no way of knowing when something's going to turn. Is this support going to hold? It's bounced. Is it going to hold? Which of those two things is going to happen next? You tell me. I don't know. Banks don't know, because it depends which bank has the biggest bank balance and whether they want to go long or short. That's why this is going up or down today, based on nothing but whether or not a bank has more money than another bank. How can you formulate a strategy based on knowing what bank balances the banks have and which way their buttons are going to be pressed today? You can't. It's all completely random. But we know roughly how far it's going to move in a day. That's it. We know it's going to go up and it's going to go down, and we know roughly how far it goes. Those are the three things you've got available to you. And you can look at where they bought from last time. And it's usually a point roughly where they sold from last time, because if they break through it, the people that sold it try to get it back down again, and the people that just bought it go, no, we want it to go up. This is why you get support and resistance bounces. It's all to do with volume of money, nothing else. And it's completely uncontrollable. You're on a train. It's going to go up. It's going to go down. One of those two stations is going to get hit. No idea which. Do you think hedging is better than a stop loss? I prefer it. But up to you. Everybody's different. This is why I'm out of the longs on the Aussie US. Because I think it's going to do that. It's a personal preference. There's no right or wrong. There's no better or worse. What do you think? Do you prefer? So let's look at the DAX today. What would you have preferred? To go long with a stop loss there, get stopped out for -1, go short there to get stopped out there for -2, to have flipped long and been stopped out there for -3, to now have a short position on in drawdown with the ability to come down here and hit 5R and make +2 on the day. That's a stop loss strategy. The result of that stop loss strategy is +2. Or would you have preferred for the market to move up and go long, the market to move down and hedge you, and you to wait for it to move down to an area that you can get out and get a +2 out of on a pullback? Which would you prefer? They both produce the same result today, if that happens. If this goes like that and 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 like that, I am sitting at -1. You are sitting at -7, 8, 9, I don't know. But you are sitting at a much bigger loss than I am because you've been stopped out and gone long and short multiple times, which is why if you're using a stop loss, you need to have a holy crap, I'm out for the day, which most traders can't do. If you lose 5 in a row, what you should do is shut your computer away and down and go and do something else. What most traders do is double their risk and go, right, I'm getting you back because you owe me money, market. For me, hedging is just, I couldn't give a monkey's what happens now. I'm relaxed because I'm just waiting for the market to decide. If the market doesn't know where it's going, I don't know where it's going. If I'm hedged, I'll wait for the market to go somewhere. And then if this thing goes boom, 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 breaks that low, pulls back and then drops, I'll go, right, we're short. Where are we going? Probably there. Why? Because that's where the buyers started that move. That's the last buy move we had. We might stop there because we know that the buyers started a move out of that accumulation and they bought it 3 times before the market gapped up. So either there or there today, it's coming down to if it breaks short. Right now, it's not doing anything. So I can go and make a cup of coffee, go and walk the dog, go and do some shopping for Christmas on Amazon and watch this every 15 to 20 minutes and go, has it moved yet? Yes, no. Which is better for you? The one where you get into one trade, make 5R and walk away for the day, or the one where you get hedged and have to sit there and babysit it? It's just, there is no right or wrong, is there? It's just a different strategy. I prefer hedging, which is why I built the stock index Hedge EA. But the ORB EA that does exactly the same thing, just using stop losses, is just as good. The edge is still there. The days that you get chopped to death will be outweighed by the days you get 10 Rs. With the stock index hedge, the days you get chopped to death are a -1. But the days where you make profit are no more than +2s, really, most of the time. You'll very rarely see me make more than 750 to 1,000 on a trade. Every hedge is locked in at 500, 600. If you're taking an opening range breakout with the ORB EA and you take a short there and it screams down to 3R, you get 3R on that trade. I don't. I get out at 2. There is, again, it's totally up to the individual. Every trader has got a different psychology and a different I like and I don't like. Some people look at this and go, God, this is the most frustrating thing in the world, sitting there like watching paint dry. I can't bear that. I need to be in and out the market. I need to be doing something. This isn't for you. You need the opening range breakout strategy. If you are a trader that has massive problems with revenge trading, and with making decisions, opening range breakout is not going to be for you because you're going to get stopped out on it a lot on rangy markets. This is for you because you get in once and you go, right, chill, let's wait. If it goes nowhere, I lose 1R. That's it. My maximum risk today is $600 unless it hits that, bounces, and then screams down to 300 ADR. Then I'm in massive crap. And I will re-hedge it and take twice as much loss. But the amount of days it does that, very, 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 very few and far between. Because it takes a massive news event or something to move the market over ADR, which is why the stock index hedge automatically moves your targets down somewhere close to ADR. Because if you don't get the clean break, you need to see where the market's going, which way is it going. And if it's going that way, see how far it can get. If it gets to ADR, it's probably going to relax, isn't it? We can get out. But again, there's no right or wrong. It's different. That's all. Will this strategy work with options? I've no idea. Don't know how options work. Don't trade options. Never looked into it. Never got into it. Never. I don't know nothing about options. I don't even know how to place an options trade. I know nothing about it. Go and have a look. The last 20 minutes would be great live room extract. Probably. I don't know. I've said I never know what's good and what's bad. And I don't know what the last 20 minutes was because I've only just read this comment and I don't know what I was talking about. Hedging is less stressful. Yeah, definitely. For me, it's about stress. Yeah. The reason I position trade is because it's not stressful. The beauty of this is it just takes time to play out, and you can see what's going on. Everybody wants to make a fortune, and they want to do it quickly. So everybody concentrates on the time frames that you could do that on, the 1 minute chart, the 5 minute chart. You're trading algorithmic chop at these time frames. It's all mess. There is no structure down here. And the problem with the low time frames is if you get into something and you get out of something within 15 minutes, you've lost 1% of your account in 15 minutes. So the first thing you're doing now is going, right, I was wrong on the short, I'm going long. In that there, you've been chopped around 2-3 times and lost 2 to 3% of your account. Yeah. With a position trade, if I get in short here, I could be in it 2 weeks later and literally my P&L gone up or down by $100. There is no stress involved at all. When I hit the button on it, I couldn't give a monkey's what happens. And it's the same with this stock index hedge strategy, which is why I like that, because I don't care what happens. At the moment, nothing's happening. So I have a risk in the market and that's it. The worst case scenario is just before the New York Open, this is still doing the same thing, and I've lost $600. I made over $2,000 yesterday. Doesn't matter, does it? It's just waiting for the market to move, and that's what you suddenly realize at some point in your journey in trading. You'll realize you have no control. One of the first videos I say to people to watch in that position trading handbook is the "You Have No Control" video. It's a crappy old video I made years ago, and it's terrible. But it's a light bulb moment for most people. Very simple concept. And once you get your head around it, you'll realize that there's nothing you can do to make money. The only way you can make money in this industry is by extracting money out of the bank's movement. And if you don't understand how the banks move, you will never make money, because the only way to make money is hopping on the back of the bank's moves. So if you're going to hop on the back of the bank's moves, you have to understand how the banks work. If you don't understand how the banks work, you're never going to understand how to make money, because you won't know that when they've gone down to here, they need to do that. I can tell you that until you're blue in the face, but until you've seen it happen 100 times and you realize that that is the bank selling and that is the banks taking profit on those sell moves, suddenly it becomes clear. Have the banks started a move, and are they going to profit take a third, 50% or 60 or 100% of that move? No idea, but I do know that they will do that at some point. And it might take a week, it might take 3 weeks, it might happen in 48 hours. I have no control. How can you formulate a strategy on something that you can't control? You can't. It's not doable. All you have is support and resistance. That's it. So you have to use a risk size that allows the market to move uncontrollably. Do you ever think about running partial positions in indices long term? Yeah, I do. When the markets are normal, I do. I run an S&P strategy, very similar to Warren Buffett's. But at the moment, this is not normal. This is not normal at all. Nothing's normal at the moment. At all. So I'm not running that strategy. But you could do, yeah. The problem with position trading, this is the best example you'll ever get of the problem with position trading in stock indices, is that, yeah, you went short there. You're still short. And it's not just short, it's you are in the hole by 15,000 points or 1,500 points on 110. That's 15 ADR. That thing has moved against you. 15 ADR without stopping. This is why I don't position trade indices and commodities. Because if they want to go nuts, they'll go nuts, and there's nothing you can do. There is no reason for the market to take profit on something that is potentially going to continue to increase. The market buys stocks because companies' shareholders' prices increase, because the company's profitability increases. If companies are going to continue to release positive earnings figures, there is no way to go but up. If you get stuck at the wrong time in an up, you're dead. And I've been dead on stock indices, which is why I don't position trade them. You could do, but you've got to use tiny risk. Imagine this being the start of the next bull market. Imagine what we're seeing now becoming the start of the next bull market. You're not getting out. You are not getting out until your account is zero. COVID's irrelevant. You can't do anything about COVID. But you know, this is a normal bull market. That is a normal correction. That's a normal bull market. That is an extreme correction. Normal bull market, correction. Bull market, correction. Bull market, correction. Bull market, COVID. Unbelievable bull market. No reason for it whatsoever. Everybody was losing money. Why? Caused. They're volatile. Haven't had this ever. Nothing ever this big. This is just all completely abnormal. Since COVID, that we've never seen. That we've never seen. We've no idea where we are at the moment. You can't possibly formulate any strategy you've ever used before COVID on the stock indices and it work. You can't buy the dips because the dips are too big. It's just not. It just doesn't work anymore. Yeah, it's a different world. You have to adapt. And again, you know, it brings me back to the same thing I keep getting asked about EAs. There isn't an EA that's going to work because the market's going to be different. Every time you back test it, you're going to trade it in a different market. You've got to be doing this. It's not something you can automate 100%. I'm talking an entry that is already going your way. Why bank all at 2R? Don't bank all at 2R. Leave a runner on. Up to you. I mean, don't bank it at 2R. Bank it at whatever you want to bank it at. Yeah. This is why the stock index hedge takes 2 trades. Yeah. It has 1 trade at 2R, 1 trade at 5R. So the idea is we get a break, we take a profit, it pulls back, and we get a runner. That's ideal. How often does that happen? Very rarely. Because the market moves in market structure. So the reason you won't get that happening, or you'll find it very difficult to get in. So let's say, for example, you take a breakout of that move, you'll go long, yeah, you'll take a partial profit, you'll move to break even, the market will come down, take out your break even, and then go in your direction. So the thing to do is not to place the break even. So if you get that entry there, you take that one off and you leave your stop loss in place there, and the market then comes down and takes out your stop loss, you've lost all that profit. So therefore you need to use a break even, but a break even breaks you even. So why break even? Why not just take it all off there and make sure you've got a load of profit in your bank? Because you're either going to give half of it away or you're going to give all of it away. That's what's going to happen 66% of the time. That 33% where it doesn't pull back far enough to get your break even and then flies up to 5R are going to be so few and far between. And what you're going to see psychologically is a breakout, a pullback. Holy crap, I'm wrong. I better get out if it gets back there. And you're going to take the 2R you should have taken in the first place anyway. I don't know any traders that can get into that move and still be in it, because every time this pulls back, your P&L drops. And every time your P&L drops, you crap yourself and you go, I'm taking it because it's money. I need to pay the mortgage. I need to pay the car. I need to buy some food. The kids want this. Yeah? Money. You take it. Why did I get out of this one this morning? Because it's money. Go and spend that. It's a Christmas present, that is. And the fact I think it's coming down. But yeah, so if you use a break-even stop, test it. You can test this very easily in the Market Reverse Alerts EA, in the Stock Index Hedge EA. You can test it in the opening range breakout EA very effectively. The market uses market structure to move, which is the banks move, the profit takes. The banks move, the profit takes. The profit takes, yeah, will either be a 38, a 50, or a 61.8, roughly somewhere around there. All we're saying is when it moves down, it will pull back about a third, about half, or about 3/4 if it doesn't do a complete reversal. Yeah, that's what happens in market structure. If you get in a short and it is below that one, the odds of you getting stopped out at a break even are 33%. If you take a short there and it does one of those two, there's a 66% chance it's going to not stop you out if you move to break even. However, it's not necessarily going to turn there. It might turn there. It might turn there. It might turn there. In which case, happy days. But you have no idea of knowing, do you? So what you do know is what your P&L is. The only thing you're watching all the time when you get into a trade and it hits a TP and you move break even on a second part of it, or you take 50% off there and move the other remaining 50% to break even, all you're looking at is that. And when that is sitting at 1% and becomes 0.9, 0.8, 0.7, 0.9, 0.6, you're going, holy crap, that's going to stop me out. So what do? You either take it there, which means you get 1.5 R instead of 2 R, or you let it come down and go, and you only get 1 R, but you're risking 2 R. So you've got a negative risk reward ratio. Break-even stops don't work. Just don't work. And the only reason you use a break-even is if you want a trailer. Or you break even the whole thing. So you wait for something to get into profit and get to a decent level, and then you break even the whole thing, and then it comes down, takes you out, so you get nothing out of that trade that you've worked really hard on, and then it flies off to 7 R, and you go, oh crap, that annoys you. What does that make you do? Revenge trade. Nothing to do with a stop loss has ever made any trader anything positive. Have you tried using something like Heikanashi? Yeah, no, it's a load of rubbish. Don't use Heikanashi. AZ, everything you try will work or fail. Yeah. Parabolic SAR as a trailing stop loss mechanism. Fantastic sometimes, crap others. Moving averages. 9 MA, 10 MA. Brilliant sometimes, crap other times. Bollinger Bands. Brilliant sometimes, crap other times. Heikanashi candles. Sometimes they work, sometimes they won't. Bank money when you got money. Stop trying to find something that's going to work. Nothing works. And it always works. And it doesn't work. And it does work. And it doesn't work. And it does and it doesn't. RSI goes up. It's brilliant. The RSI is fantastic when it works. It's brilliant when it is, but it's not. Yeah. Sometimes it works. Sometimes it doesn't. Yeah. 9 moving average, brilliant in trends. Anything that is a weak trend, 9 moving average, useless. Heikanashi, everything. I've done it all. There isn't anything. I used to trade with a guy called Charlie Burton. He has an amazing ability to run trades. I was always banking, thinking I was clever when it pulled back. But of course, some went on to resume the trend. Yeah. You're confirming everything I've said. 50-50. Sometimes. Your job is to decide on which. There's no indicator that's going to tell you which and when. Nothing. You bank what you can bank. The only way you can make money is to wait for the market to move. And this is why we look at this every day. At 11 o'clock this morning, the pound is going to move. Why? Because there's news. I see it every day in Telegram. Holy crap. Did you see that move on the Swissy? What on earth happened? Well, if you knew that the Swiss franc rate was being released today, you would know exactly when that move was going to happen. Why are you questioning it? How could you not look at this? This is the only thing that's important on the planet when you're trading Forex. This is why it moves up and down. If you do not know about news, you are dead. Because you will go short on the pound US dollar 10 minutes before non-farm payroll and wonder why you got stopped out. And not just stopped out, slipped by half an ADR. Holy crap, that's wiped out my entire week's profit. This thing is critical to your understanding of how the markets move. If you ask in my Telegram group, why did something happen? You will usually get abused. Because I do nothing every morning for 2.5 years. I've been coming in here going, first thing of the day, right, today, this is going to move then, that's going to move then, this is going to move then, probably in this direction. Let's have a look at what's happened overnight. Let's look at why the market moved in the Asian session. It's all here in front of you. Somebody asked about the Swiss franc move the other week. I can't remember what it was. It was a euro or something. Why did the Swissy suddenly do 300 ADR? Because the European CPI figures came out. Where is Switzerland? It seems taking multi-direction basket trades on the market reverse alerts is ideal. Do it then, Mumo. Do it. Yeah, I mean, it's... I've tested it. I couldn't make it do much at all, personally. But if you like it, do it. There's every chance it'll work. Sometimes. Other times it won't. Someone needs to make a Lee out of context compilation. That would be good. No, that wouldn't be good. Hope Brian's not in here. Don't tell Brian about that because he'll do that. He comes in New York, so I'm safe this morning, I think. Yes, me out of context. Support's holding. We're not going anywhere at the moment, are we? So all I'm going to do today is monitor the DAX. Looks like it wants to break down. It needs to get through here. And if we can break that, we're going to run into that. And if we can break that, we're going to run into that. So there's multiple hurdles on the way down today. I will be watching price action down here. Probably in there a little bit as well, but that's a little close. I'm very, very short biased on these indices at the moment, just purely because of what we're seeing. I can't believe we're not going to pull back on this. And this is just second leg on the previous leg down there. So I've just got this feeling that we are going to collapse at some point. We're going to need some positive US news or positive Euro news to drive it. And I think it's going to have to be US because I don't think the Euro is going to give us any. So I think it's probably going to be an afternoon session that we're going to get that move. We've got news coming up all week that could potentially do it. So I'm just loath to get out of any moves short too soon because I just think that we've got a day coming at some point where it's going to go mental. Sorry, I meant multi-directional, specific for indices to safeguard against crazy bull bear runs. Yeah, so but the problem with that, Mumo, is where do you take profit? Yeah, taking multi-directional basket trades is fine, but you're basically hedging yourself. So you have to hold those longs until the end of the move. Otherwise, if you get out of those longs, those shorts are just going to go into massive drawdown. Which is the problem with hedging. Yeah, when do you get out of this hedge? This is why I'm looking. It's going to be there, it's going to be there, or it's going to be there. Yeah. Screenshot this. Come back this afternoon. I can guarantee one of those three things has happened. If it breaks. If it breaks. Yeah. Your job is to choose one. So what you've done is instead of taking a stop loss today, you've given yourself a puzzle, which keeps you occupied for the session and stops you over trading. Always going to be good, isn't it? But yeah, you've got to get out of the hedge. So what you have to do is exit one at a turning point and then get out on the pullback. So if you do that with the market reversal alerts EA on the stock indices on long-term trends, this one on the DAX and the Dow and the S&P and everything, where would you have got out? And would you have got out? 90% of people, if they got long there and shorted as well, if they were hedged there, for example, 90% of people would have got out there because we made a new low. Market structure shifted. There, look. High, low, lower high, lower low. That's where I would have got out of my longs, anticipating it going short. When it didn't, I'd have got a reversal alert and had to go long again. Where'd you get out of that hedge? You probably didn't get an opportunity to get out short. It might have given you an exit there where you said, actually, I'll get out short there, but you'd have to re-hedge to go long again. So, you know what I mean? You're still in it. It's just so complicated. Every hedging strategy I've ever looked at in the past, on paper, looks great. And on paper, mathematically works. But in reality, the execution of it is so complex and so difficult, it's virtually impossible for you to do it, because during that hedge, emotion will come into play and you will get it wrong 5 times. Yes, you will re-hedge it and you will limit your risk, but you will get it wrong 5 times and you will get frustrated in week 3 or week 4 of that hedge and you'll do something stupid. You know the maths and you know what's likely to happen, but you won't execute it. I've built EA models on hedging, and I'm building another one at the moment because I'm looking into other ways of doing it, and not hedging an instrument, hedging a portfolio, which is what really hedging should be about, I think. But if I can get every single hedge profitable on every single instrument with a small amount of profit over a period of time, it's an edge. But it's got to be using multiple different currencies that move with multiple ADRs, and some are trending and some are ranging at the same time. Then it works. Very, 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 very complicated though. Which is why I'm very tired in the afternoons, because my brain power in the mornings is completely used up by trying to calculate stuff, which is really annoying. But anyway, maybe we have to wait until the 15th when the futures rollover takes place for a pullback on the indices, possibly. Yeah. There's all sorts of things that could move this. A rollover will definitely move it, but you just tend to get volatility around a rollover. There's no reason for a change in direction because futures contract is rolling over. Doesn't necessarily change your bias. It means you're going to swap contracts, but don't know whether it would make a pullback. That would be an interesting thing to go and test and look at every rollover date and see what happens to the market on rollover days. Usually you get volatility increases, but be interesting. That would be too easy, wouldn't it? If the market changed direction every rollover. Check it out. Might be something worth looking at. You can get rollover dates very easily. Can you tell me your opinion on Bitcoin? No. My mate told me to buy it because it's going up. I have no idea. Don't trade Bitcoin. It's going up at the moment. I haven't looked at it for ages. I can tell you it's going up at the moment. And if you've been in here any length of time, you'll know why I know that without ever having looked at the thing. But I don't know when it's coming back down again. And potentially, yes, it probably will continue to go up. Right. The reason this is going up is because the stock indices are going up, and this is now correlated to the stock indices. You go and look at Bitcoin side by side against the stock markets at the moment, and you will now see that after the initial nut run that Bitcoin had, where it just went Hey, look, I'm the next big thing. Oh, no, I'm not. Oh, crap. And everybody got bankrupted. It now is mimicking the stock indexes. So why trade that? Trade the stock indices. They have a fundamental reason to move. This is copying them. Albeit more volatility, but it's basically a stock index now. So I don't know. I don't trade it. All I would say, Peter, is think about it from the point of view of why things move. I can tell you for sure why the stock indexes move up and down. I can tell you for sure why the FX markets move up and down. I can tell you for sure why oil moves up and down. I have no clue why Bitcoin moves up and down. Who invented it? What drives it? And why? If I don't know those fundamentals, I'm not interested. What moves it? Why does it move? Why in the last 2 days has that, or last week, why has it had a move of, I can't even figure the numbers out, 13,000, 223,000. 13,000 is ADR. Why did it move 223,000 when it normally does 13,000 on that day? If you can't tell me why that happened, how could I possibly formulate any way of making money out of it? Look at that move and look at the ADR. Look at this move here. 358,000 pips, or whatever you want to call it, on a 13,000 ADR. Why? You can't trade something if it's, and this is only the 4-hour chart. Look. The last 2 days, it's moved 470,000. Stock indexes have gone up. Yeah. So basically, it's the Dow, isn't it, really? But, I know why this moves. There are 30 of the largest companies in America releasing information which makes their stock price increase and decrease. What drives Bitcoin? Everyone gets excited about it. Everybody, all these YouTube channels out there are run by kids, basically, aren't they? Bitcoin to the moon. Yay, yay, yay. I'm losing loads and loads of money. And I get about 500 a month from subscribers. Listen to me. They don't know nothing about what the thing is. They don't even know who invented the thing. Just not interested. The Russian guy has some portfolio EAs he's been working on. Gentle to see what you come up with. All right. The Russian guy. Oh, yeah, I know who you mean. Yeah. Again, he sells courses on how to build EAs. Yeah. I don't know. I'm skeptical about everything. Asking Lee about Bitcoin, asking me about gold. Yeah. Oh, psyched, not scared. Yeah. Psyched to see what you come up with, not scheduled to see what I come up with. You can also schedule that in at some point. I may release something or not, depending if it works. If I can't, the thing about me is, which if I can't get it to work, I just dump it. I've got hundreds and hundreds and hundreds of strategies in EAs I've been developing over years. They're all dead. They're in the bin. If I can't make it work and I can't use it in the real world, it goes in the bin. That Russian guy, I don't know how many products in EAs he's got out there, which I don't think he ever uses. It's like the Agamat guy, the guy that made Agamat, and Agamat 2, and Agamat AI, and Agamat whatever. It's the same thing. And it uses a stock indicator built into your platform. Don't get me started on those people. The portfolio hedging sounds interesting. Yeah. It's very much the same as this. It's very similar to this. It's just a case of, have we managed to get clean breaks today? Yes? Brilliant. Bank them. Yeah, it's the same thing. If they all hedge, we're going to have to deal with them. It's just, like I say, we don't know which way anything's going, and we will either get hedged or not get hedged, depending if the market goes into rotation or breaks out. That's it. Where are you at the end of the day? If at the end of the day you have a 1.2% profit across 5 instruments that you've used, 3 of them are hedged, 2 of them have gone mental, close that 1.2% out. Start tomorrow. It's very simple. All we're doing is we are getting a product or an EA to enter the market on multiple instruments at the same time. And at the end of that day, we are seeing if that is a green number. If it's a green number, put it down there. If it's a red number, deal with it somehow. Nothing complicated. The EA's mathematics are complicated in the way that it has to operate, but the strategy is very simple. It either works or it doesn't. Yeah, it's a bit like the London breakout strategy. Some days the London breakout strategy is fantastic and it will move to 125 ADR and that sort of thing. If that's moved to 125 ADR on the pound US and the euro US has moved to 125 ADR, the Aussie dollar CAD and the pound New Zealand and the US dollar Swiss have all hedged. And the total 3 hedges locked in is lower than the 2 125 ADR runs that you've had on the other pairs. The P&L figure is green. Bank it. It's that simple. No idea when these guys are going or if they're going to go. But you just have to pick uncorrelated instruments that move at different times. So today, for example, pound moving this morning for 2 reasons. US dollar moving this afternoon. Canadian dollar moving this afternoon. If you're going to do a portfolio hedge play today, trade the pound, the US and the CAD crossed with the Aussie, the yen and the Swiss. Complete uncorrelation. Yeah. If all of those news events drive 3 of those currencies through the roof, you're going to make a fortune. If they all whipsaw, you're going to get 3 hedges. What do you do? How do you deal with those? That's what we worry about tomorrow. That's the strategy. It's so simple. You've no idea where anything's going today because you don't know what the news is going to be. So that's all it does. It's going to pick 4 to 6 instruments which are uncorrelated across time and instrument and news and trade them. Yeah. So you need an Aussie pair in there because you want something that moves in Asia. You want a yen pair in there because the yen goes nuts. You want a Swiss pair in there because the Swiss goes nuts. You want the pound or the euro in there, and you want the US or the CAD in there, or a combination of those 2. You've got complete diversity across all majors, and none of them are crossed with each other. Yeah. Doesn't matter what moves today, does it? Think about it. Yeah. Look at the ADR dash, and this is where this kind of theory comes from. The New Zealand dollar has moved today. The Australian dollar has moved today. Nothing else has. So if we have now got hedged on the euro pound and the US Swiss, these 2 have made us money. These 2 have locked in a maximum loss. If that plus that equals bigger than that and that, cut them all. Walk away with an amount of money today. Very, 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 very simple. But you need the automation to do this because trying to do it manually is hard. And also you need the automation to do it because there are various ways of automatically reducing hedges to make sure that if you do get hedged, you get hedged with a very small amount rather than a normal big amount. Yeah. So the breakouts, you let them go. The hedges, you make sure they're squeezed as small as you possibly can get them. Yeah. So there's mechanics that you can do to make these hedges small. So as long as you get 1 or 2 breakouts a day, from the testing that I've done, it's very, very robust. It's never going to make you a fortune because you've got every day you're guaranteed to have losses. And you're going to have market conditions as well, like this. Yeah, you're going to get 4 or 5 hedges in a row. So you're going to have down, your P&L is not going to, again, the P&Ls don't do that. The P&Ls are going to do this. Yeah. And you'll find that no news weeks, your P&L will do that. Big news weeks, your P&L will do that, because you'll be taking 150 ADR profits. Yeah. It's just, it's working out the mathematics and working out the Achilles heels. As I always say, there's Achilles heels in every strategy, and hedging has Achilles heels as well. It's a case of how do you minimize those? You're never going to remove them. You've just got to make them as small as possible. And I think I've come up with some really good ways to minimize losses based on, again, random movement. Yeah, look at the Aussie today. I mean, this today, the Aussie New Zealand. Yeah, so you get in. Let's look at a very simple entry strategy. Again, it's one I've been playing with. It's just the 9MA crossover. Yeah, so you've got a 9 moving average. When you cross over that 9 moving average, which would go like that, when you cross over that 9 moving average, you go long. Yeah, you don't get out of that trade until it comes back down below the 9 moving average, which guarantees on a trend day you get 80 to 85% of the trend, which is why every trend traders intraday use the 9 EMA, because it's the best thing since sliced bread for keeping you in a trend. If you get hedged on 2 New Zealand pairs and you get 2 Australian trend breakouts on that news event, yeah, these 2 Aussies, which have hit 125 ADR virtually, are going to be way more than that tiny little hedge you've locked in there at half an ADR or a quarter of an ADR. Yeah, and again, all the hedging that I'm working on all works on ADR, because every instrument is going to have a different range it usually moves in. So every instrument has to calculate based on that ADR. And we want to hedge within ADR, obviously. So, because if we're going to move an ADR, our hedges all need to be less than an ADR, half an ADR or a quarter of an ADR. So if you hedge at a quarter of an ADR and you get 1 ADR breakout, that pays for 2 hedges and makes you profit. It's all math. All this is math. So, all the banking algos, they're all just literally maths equations that are long-term profitable. And that's all that I'm doing, is coming up with the maths equation for this. But you got to be a bit clever with what you put it on. And again, correlation is going to change over time. Yeah, the euro and the pound used to be very, very heavily correlated. Brexit happened. Yeah, things are going to change, which are going to change what you need to trade as well. So again, I can test stuff, not necessarily going to work the same in the future. So you need to, adjust as you go, sort of thing. So, but yeah, it's interesting. This is what I spend my life doing, because I'm sitting here now, and I've been sitting here waiting for something to happen. You've got to fill your time with something, haven't you? You might as well look for other ways to extract cash. I only use Bitcoin to cash out of prop. It's not an asset. I don't think it is an asset. I know there's ETFs and there's all sorts of things happening. There's a bank that's just adopted. There you go. SocGen, set to become the first big bank to list stablecoin. Yeah. The whole process of doing this defeats the object of it. The whole point of Bitcoin and crypto is it is an anonymous, uncontrolled, unregulated thing that you can use under the radar, right? As soon as the banks get involved in this, they will become manipulated. As soon as they become manipulated, they will fall in line with convention. As soon as they fall in line with convention, there's no need for them. We've got normal currency. What's the point? Yeah. How can you replace my pound if I can't go and buy a Tesla in Bitcoin? I have to convert all my Bitcoin into the currency that I can spend. Why introduce a new currency? If you're going to introduce a new currency and it's got its own thing, and I can't spend that currency, what's the point in it? If you're going to introduce a new currency that I can use and I can spend, what drives it? Well, we don't know. Well, I'm not going to buy it if it's got the possibility of going down much faster than my own currency. Okay, then we'll peg it. Well, if you're going to peg it, why not just use the thing it's pegged to? Swiss franc. we never used to trade the Swiss franc. Why? Because it was pegged. They remove the peg and all of a sudden everybody starts trading the Swiss franc because there's no point in trading the Swiss franc because it was pegged to another currency. So all you did was trade the currency it was pegged to. That's the way I see Bitcoin at the moment. It's moving with the indices. Why not trade the indices? Because the indices, we can tell when it's going to move and why it's going to move. That thing, no idea. This doesn't make sense. Yes, I get that you can make a fortune out of it, but at random, if you're lucky, no. Does anybody know anybody that held Bitcoin? Yeah, I mean, does anybody know anybody that held Bitcoin from here up to there? Anybody didn't get out on that 38 retracement? You'd have crapped yourself. If you were looking at $25 million or something there and you suddenly saw it turn into 12, you're taking that. Don't tell me anybody held through that. Rubbish. Just, you know, and everyone was like, hey, buy the pullback to the moon. Dead. I know a guy that took out a $30,000 loan here to relong it. Oops. Just don't get involved. It's just pure gambling, the whole thing. If the banks aren't trading it, it should tell you something, shouldn't it? They will at some point, but only to regulate it and control it. Personally, I wouldn't feel comfortable position trading anything other than FX. No, I don't. I'm in a bunch of euro right now, worried about it because I've seen it pull back a million times. Yeah, it will do. It will pull back. Not because this euro US dollar, yeah? If you're long on the euro US dollar now, you've got the US dollar. This is the thing. You know, whenever you look at market movement on a chart and you see it do that, if you go and look at a news feed like Forex Factory, Financial Juice, or anywhere, yeah, at that point there, you will find a news event. So this afternoon, one of two things is going to happen. The US is either going to power up or weaken. Yeah. If it powers up, you remain in. Everybody that is short is suddenly seeing their P&Ls increase, which makes them more jittery to get out. So the next news event that weakens the US dollar, twice as many people will be on that. It will pull back faster. So you either get the nice, smooth moves, or you get the parabolic V-shaped recoveries. We either climb up the stairs and fall down the elevator shaft, or we get there in an orderly fashion. And then while we're doing that, we can carry on doing that forever because everyone is making money. In this market, one person's making money. When that person panics, everybody panics. Yeah, it's just why it works. It's how it works. So if you're on the wrong side of it fundamentally, you find that it just takes longer to get out. Yeah, if we got the fundamentals right, you know, this is the same. If you could predict which way these were going every time, it's a much better way of making money. You can't though. Yeah. There was absolutely no reason fundamentally for the Australian dollar to drop 150 ADR because its interest rate didn't change. The market participants were overstretched long, needed to short it. If they had been short it, they would have longed it. If that had come out as a positive, regardless of which direction they were, the thing's going through the roof. Unless we've got some fundamental that says this is the last time, in which case I don't want to buy it now because I'm going to sell it. Yeah, it's just controlled by the bank and the institution that has the money to push it up and down, and you don't know which way it's going to go. But you do know it will at some point go the other way because those guys have got to make the money out of it in the long run. So you just don't know the timing, and this is what the bootcamp teaches you. Timing. When were we going to come and test that propulsion gap? Could have been there. Could have been there. That sort of move. It ended up being here. But we know it's going to do it because it always does. In the same way as we know it's coming here. Either today, tomorrow, this week, or next month. It will. It always does. We just know it does because we can see it. You can prove it to yourself. You don't need me to prove it to you. You got in long here. Holy crap. Did you get out? Yes. Because all that is on a 4-hour chart is a 50% pullback on a down leg. And every time frame you look at is going to give you a different view of the market. But the market view is going to be the same. It's going to go down, it's going to go up, it's going to go down, it's going to go up. That's all it ever does. Just life. It baffles me when I see that 100 people watching your live now. Is there 75 now? They've all gone. They've fallen asleep. With the wealth of knowledge you'll be spewing out on a daily basis, just goes to show most people want it right now. Yeah. I'm happy with this. If I had 750 people in here now, I would never, ever, ever get off stream. Ever. I would have to stop looking at chat because I just wouldn't shut up, would I? I'd die of dehydration. I will hold Bitcoin from 1,000 to 6,000 up to the highest peak. Good luck. I could do that. I mean, I could hold it. If I put $1,000 in, right, and never looked at it, maybe looked at it once a month, I could probably hold it. If I just put $1,000 in, then I don't know what that $1,000 would have become, but you can do that. That's an investment though, isn't it? It's not trading, that's investing. That's getting a lucky hit. That's the same as a stock trader getting a NVIDIA earnings break, yeah? So that's a NVIDIA earnings break. Yeah? Investors buy NVIDIA. They hold it. Where it turned. Funny that, isn't it? Why did it turn there? Because NVIDIA's not worth more than $500 a share. It wasn't then. It isn't now. But the earnings release said stock prices are undervalued. You can catch those, but I know what drives NVIDIA. I still don't know what drives Bitcoin. Neither does anybody else, because nobody even knows who invented Bitcoin. So what drives it? Greed, fear, the same thing as everything else. It's all just people. Right, I'm going to leave it there. I'll be back this afternoon at 2:20. Nothing much is moving today. DAX, I'm just going to hold. I haven't got any choice. I'm in it. But we're not going anywhere. We're an hour and a half in now, and we haven't moved yet. So it's a case of waiting on this. We might get some movement at 11 when Bailey speaks. So that obviously will potentially move the pound, and that potentially drags the euro with it. So if the euro gets dragged, the DAX will obviously do the inverse to the euro. So we might get some movement off of Bailey. But at the moment, there's just no movement in the index. So we can't do anything with it. So I will look for an exit if we get a move. But these are the areas I'm looking at. And I'll just be watching it at the corner of my eye all morning. But I suspect we'll be locking in a hedge loss today. Nothing we can do with it if it's not going anywhere. One thing you need as a trader to make money is things to go up and down. If they don't go up and down, you don't make money. Right, I'll leave it there. Anything you need, I'll be in Telegram. Other than that, 2:20 this afternoon for the New York session. Back tomorrow morning as usual, 7:50 for Frankfurt. And we'll see where we go from there. All right, have a good morning, and I will see you guys in the next one.